Hello, this is Tamala with Learning You Education. Welcome to Volume 1, Issue 2 of Learning You Education LLC's audio newsletter. Send your topic requests for future issues to info@learningyou, that's Y-O-U, education.com, or telephone 404-808-9225. In this issue, you'll find great information on community association loans provided by Alliance Association Bank, a division of Western Alliance Bank, member FDIC, and great questions you can ask potential vendors that will allow for a deeper discussion and clearer understanding of expectations, making your professional relationship more positive and productive, provided by Learning You Education. Let's begin. Why You Can't Just Spring into an Association Loan by Pat Hillen, PCAM, CMCA, Vice President, Alliance Association Bank, a division of Western Alliance Bank, and Josh Ormiston, Vice President of Association Lending, Western Alliance Bank. If you're contemplating a capital improvement project, you may be considering taking out a loan. If this is the case, there are some key factors you should consider before getting too far into the lending process. The first step will be to determine if the association is allowed to borrow and what actions need to take place in order to be able to legally proceed with the loan agreement. This is the stage where you want to involve your association's legal counsel, who will be familiar with the association's governing documents as well as state laws regarding associations. In order to close a loan, your attorney will be asked to provide an opinion letter certifying the validity of the transaction. So, you'll want to make sure that your association is, number 1, allowed to enter into a loan agreement, number 2, allowed to pledge asset income as security for the loan, and number 3, what approvals need to take place in order to execute such a transaction. Once you've determined that you have the ability to enter into a loan agreement, you'll need to determine what means will be used to repay the loan. For smaller loans, an increase to regular monthly assessments may be a feasible way to make loan payments. Another option could be to implement a special assessment, wherein each unit owner would pay upfront or participate in the loan. In either case, board or homeowner approval necessary to implement the desired repayment structure must be considered. It's not necessary to have the repayment structure implemented prior to applying for the loan, but in most cases, the repayment structure will have to be approved before closing the loan. That being said, implementing an increased regular assessment or a special assessment prior to obtaining a loan can be a good way to demonstrate to the bank that the association has both community support and the ability to repay the loan. At this point, you're probably ready to engage a bank. It's advisable to utilize a bank that specializes or has significant experience with association lending. When applying for a loan, the bank will want to know what type of loan and terms being sought. For large, lengthy projects, there'll most likely be the option of entering into a non-revolving line of credit for the construction period. These lines are typically 6 to 24 months and give the association the option for interest-only payments during the construction period. Upon expiration or at the end of construction, the line will be converted to a fully amortized term loan. A typical term loan will be from 5 to 15 years in length. It's important that the loan length not exceed the useful life of the improvements being financed. Alternatively, if the project is short-term or small in size, it may make sense to forego the non-revolving line of credit and enter into a term loan immediately. When a bank evaluates a loan request, there are some key metrics that may be used to gauge the credit risk of the association. The following are some factors that a bank may consider during the underwriting process. It may be possible for your community to improve in some of these areas prior to applying for a loan. Number 1, delinquency. This is the number of accounts and total amount of delinquencies. Many banks have a maximum rate of 10% for number of units aged 60 plus days. Number 2, liquidity. This is the amount of cash as a percentage of annual assessments and annual debt service. Many banks have a minimum liquidity requirement of 20% of the association's annual assessments. Number 3, size. More homes provide a diversified cash flow stream. Number 4, assessment increase. Large increases may cause delinquencies to rise. Number 5, annual assessments versus market value. Annual assessments should not be greater than 10% of the unit value. Number 6, owner occupancy and concentration. A high percentage of investors not living in their respective units poses more risk. Number 7, management and capital planning. Strong external professional management company with experience in managing similar projects is desirable. Also, a professional reserve study that is at least partially funded indicates prudent financial planning. Ratings of fair to strong in most of the factors above can greatly improve your chances of being approved for a loan. All in all, a loan can be a fantastic way for a community to finance a large capital improvement project. It allows the community to spread the cost out over a longer period of time, which not only decreases the immediate impact to residents, but it also allows for the cost to be allocated to future residents that will most likely also be gaining benefit from the improvements. There are many things to consider before entering into such a venture. Hopefully, the steps above will provide you with a springboard to starting the process. If you have any questions concerning this article, please contact Pat Hillen at phillen@allianceassociationbank.com or 770-845-0795. Section 2. Here are some questions you can ask potential vendors that will allow for a deeper discussion and clearer understanding of expectations, making your professional relationship more positive and productive. Provided by Learning U Education. When seeking to hire a vendor, there's a number of questions that you need to answer to make sure that you're hiring the correct fit for your community. Once you've determined the scope of work and the type of vendors that you'll require, make sure that you consider, is the service you need a niche? Is it a complex matter? And are there multiple vendors needed in order to properly perform the work? The answer to these questions will give you the information to understand how many vendors need to be in your vendor proposal process. How many quotes do you need? I suggest between 3 and 5. Any less and you don't get a good sample of the market. And any more, that may bring in too many variables where you're no longer comparing apples to apples. Depending on the project, you very well could need more than 5, just to be clear and make sure that all the bases are being covered. However, make sure you are indeed comparing apples to apples when comparing the quotes. I'll give you a list of questions that you can use during your proposal process. They're given in no particular order of importance. Choose the ones that you feel are most appropriate for your situation. As with all of these questions, ask for complete responses. Single sentence answers are not always going to give you the information that you need to determine if this vendor is the appropriate one to work with your community. Now here's some questions. What's your expertise? Can you provide at least 3 references for the work that we're requesting? What are your credentials? Are your staff bonded or have they had a criminal background check? What's your reputation in the industry? This is something you may need to research yourself. Insurance. What kind of insurance do you provide? What's covered and what's not covered? Will there be a pre-walkthrough or meeting? Will there be a post-walkthrough or meeting? When does the work begin and finish? What'll cause a delay? Are there any penalties for the association? What are the penalties and why would they occur? You'll want to know how many projects they're conducting right now, and will any of those projects interfere with yours? What are the risks in the work being done? Is there a potential for property damage, like underground water pipes? Are there EPA concerns with runoff? Will there be higher than normal utility bills? If it's important to you about who is working on your account, whether it's a specific community manager, a certain customer service representative, an on-site supervisor or project manager, are you going to have the ability to interview that person, or will they be randomly assigned? Also, will you be able to meet that person before the work begins? Are there any opportunities for potential changes to the contract? What about budget overruns? Change of products? What is the approval process for these kinds of situations and the time frame? Are there any penalties or costs affiliated with these? Is there a potential for your contract to be bumped? This includes delays, reworkings, reorganizations, redistribution of staff, or other areas that are different from what you're speaking about at the moment. What'll cause this, and what does it mean for you and your association? Again, if your contract is specifically in relation to communications with a particular individual, what is their experience and their credentials? How do they work? What's their process, and what should you expect from them? How do they communicate updates and progress? And what are the communication intervals? Who do you contact if there's a problem? What if you're not getting those updates when you're supposed to? Should they meet you on site or simply tour the property themselves? Remember, cost should not be the determining factor on hiring a vendor. It's important, but I can't tell you how many communities and real estate professionals have told me they regret choosing the lowest bidder. The quality of work should be an important consideration. Don't trade a lower price for substandard work. Clarify who the point person is. You don't want too many cooks in the kitchen. There should be one board representative who gives the board decisions to the vendor. Know the termination restrictions or requirements and penalties, if any. If this is a complex or high-dollar contract, you may want to have the association's attorney review. Are there any surprise costs or miscellaneous charges that are not specifically disclosed in the contract? Will there be any inconvenience for the residents? Does the vendor give notice to the community about utility suspensions for the work? What real-time progress is available? And is there after-hours contacts in case there are issues? How do they handle those? Hopefully, these questions have given you the opportunity to have a deeper discussion with your vendors. Please make sure that not only you understand the agreements within the contract, but also all of the areas that are going to be important for your association, your board, and the residents. Please add any questions that you feel appropriate, and you're always welcome to send them in so we can add them to our list. If you've enjoyed this video, please share it with your friends on Facebook, LinkedIn, Twitter, and other social media. If you're interested in receiving future issues, please go to www.learningyou, that's Y-O-U, education.com, and sign up for free. Remember, Learning You Education is here to help you learn you and what you do better.
Ain't nothing better than watching you